Hello, my name is Taylor. I'm a financial coach and I help my clients set up a budget and a cash flow system so that they can maintain their lifestyle in retirement. That is what we're going over today, is budgeting in Monarch money as a retiree. When you're no longer taking that paycheck, you have a fixed income and maybe getting into some adjustments on the new lifestyle there. So I want to go over some just quick tips and some things to be aware of. Now, most of these videos are applicable whether you're retired or still working toward retirement. Most of the videos on this channel are all completely relevant to you. I just want to point out a couple nuances that you might need to be aware of as you're setting up your budget in Monarch money. So let's dive into it. First off, when you are creating your categories, you do need a couple different categories that Monarch does not already have preset for you. In order to create a new category, you're going to go into your gear icon right here, and you're going to go ahead and click on categories. This is how you get into your category settings and update and adjust your categories. I have a whole video on just categories if you need help with this part right here. But first off, what you're going to do is make sure you have two categories. One is Social Security. If you're getting some kind of Social Security, same with a pension. If you want to create a category for a pension, you can absolutely do that right there, or any other income sources that you have in retirement. The next category you're going to need is called investment withdrawal income, withdrawals. Totally up to you what you name it, as long as it makes sense to you. What this income category is for exactly what it says. It is when you pull money from your 401k, IRA to live off of. You are in the pay down time in life. You are withdrawing those investments and using all your hard-earned work that you've put on a lot of effort toward your lifestyle now. That is now going toward lifestyle. So we're going to mark that as income. As you're getting ready for retirement, you're marking your transactions to your 401k as like transfers, savings, and all that stuff. But now that you're taking money out of the 401k or the retirement brokerage, whatever it is now income. That is what you're budgeting. So that is why we need an income category in order to capture that and to get really good reports. When you want to run a report on, hey, how much did I pull from my investment income this year? That is how you're going to get that report, is having a category strictly for your savings withdrawals. So I do recommend using this for only your investment income. So not like your savings account to your Chase, like you're not your regular checking savings account or high yield account. Those are just transfers, money moving between your accounts. It's the money that you really want to recognize as new income, which is that investment, brokerage, and the things that you're really paying attention to. It's the stuff that your financial advisor is really paying attention to, right? Hey, how much are you going to actually withdraw for your investments? And they're running those retirement projections. This is the number that they're going to want you to be paying attention to, is making sure you're not withdrawing more than your plan for retirement says you should withdraw. So that's why we want to keep this for those specific withdrawals. So you have two different income sources, and this is what you are budgeting. So if you're receiving $10,000 a month from your investment accounts, you're withdrawing $10,000 from your 401k, IRA, or whatever it is for you. Plus, maybe you're getting $3,500 from your Social Security. Maybe you're still receiving a little bit of a paycheck. Maybe you're just working part-time. Maybe you have a little side hustle there. You can go ahead and still budget your paycheck and everything else. Budget all available income that you're going to be expecting in retirement. That is how you're going to set up your budget. Now, the budgeting process is going to be the same as all these other videos. You're going to budget every dollar a job, kind of make a plan for that income. If you're budgeting $13,500 of income, go ahead and assign $13,500 within your expense categories to make sure that is the amount you can live off of. Now, if you get extra, let's say you pull out another 50, make sure, let's say you're planning to pull out 50 so you can buy a car. So in that month, what you would do is you'd probably budget 60,000, right? Your regular 10,000 plus the 50,000 extra, and you have this $50,000 in your budget. What you can do is assign that 50,000 to, let's say, that car purchase. So let's go ahead and put $50,000 right here. This is not applying to all future months. This is just a one-time change because I'm not checking this button to apply all future months. So if that was checked, then it would. But in this case, we're just withdrawing a little extra amount so that you can buy that car. So you might have extra lumpy withdrawals. You'll just adjust your budget every month that it's not consistent. Make your plan for the month, plan where the cash flow is going to go, and you're all set. Now, it's really critical to mark those withdrawals as income. But if you have your investment accounts connected, you may be running into an issue where you have a lot of mess of a transaction. You have a lot of dividends, buys, sells, interest, transfers, all that stuff coming from your investment accounts. And you know that that is there, one, because it's usually probably a mess. But two, if you click on your investment accounts, you'll know you have transactions if you scroll down and there's transactions right there. If you don't have transactions coming from your account, you have a much simpler situation because you really don't need transactions from your investment accounts. Now, it's a personal preference. A lot of people really push for Monarch to introduce this ability to turn on this idea that you can sync investment transactions. This is an option. You can turn this on. If you do, you are going to get investment transactions. This is completely optional. And honestly, if you don't care to see the buy, sells, the dividends, and interest, because it's a lot, especially if there is active management in your account or your advisor's managing your account, you're going to see a lot of this in your transaction page, and it's a lot of clutter. So I honestly wouldn't turn it on, because really what you're budgeting for most folks, is the amount that actually hits your checking account. When the money hits your checking account, that is what you're budgeting. Your budget is not determined on if that dividend actually pays out this month. Right? That is your investment advisor's job. They're monitoring those transactions. They've got this. Okay. But if you want to monitor it, great. That's why it's there. This is why they created this option to have investment transactions. Totally up to you how you want to run that. But if you're like me and most of my clients, you might not want to see a lot of this stuff. So a real quick trick is to really, you just really want to hide everything that's coming out of your 401k investment accounts. Like, you don't need to see any of this stuff. And when I say hide, I mean just mark it as a transfer. You don't need to actually hide the stuff, because marking as a transfer is the same thing. You can do this, but marking as a transfer does the exact same thing as hiding it. Because a transfer is neither income nor an expense. It is not going to show up in your reports, your cash flow, anything that you're doing here. It's almost the same as hiding a transaction. So I would probably just mark these as transfers, right? Because it kind of is a transfer, right? You receive a transfer from your stock that received, and you're probably going to reinvest a lot of this stuff. So you transfer it back, or you might withdraw it. But again, that's when we recognize as income. When we move money from Fidelity or your investment, your 401k, to you hit your checking account, that's when we mark it and want to budget for it. Everything else, not so much. So let's say these right now are getting marked as interest or income, and you're not liking that. You're thinking this is a lot of clutter. When you run your reports, you don't want to see those dividends in your reports. What you're going to want to do is just mark those as interest. So the rule that I would have you set up is you change the transaction for one of them, and you're going to click on create rule. Now you can also do this by going into your settings, going into rules, and then clicking on create rule. You can do that right here. What I'd recommend you do is you turn on the account for the if transaction comes out of these accounts. And I would just say all your brokerage accounts, all the investment accounts that you do not need to see buy, sells, dividend, and interest. If these are the transactions you only care about, or when the money leaves the account for you to actually budget and spend, then you can absolutely set up this rule for yourself. And what you would do is either update the category so it is a transfer, or you can hide it. Again, it is doing the exact same thing. This is a little redundant. You do not need to do both. You can just do one or the other. I'd really probably recommend category this though, because when you're reviewing your transactions, it's going to be way easier to visualize, and your data is going to be a lot more cleaned up if you just do this. So this is the rule I would do. I'd screenshot this, go into your Monarch, set up your rule so that you don't have to deal with those buy sells anymore. Now, again, if you want to see those, great, keep them. That is totally up to you. I'm going to go ahead and press save, and that means that everything in the investment accounts is always going to be marked as a transfer. That way, I don't really have to worry about these. They're kind of hidden. They're not affecting my budget or cash flow. And then that way I can focus on what matters, as when that money hits my checking account. Now, this also applies for accounts like your 529. If you have not 529, if you have that works too, actually. So 529 account, if you are paying for your kids' college education and you are now withdrawing from that 529 and it is going to your kids, like you're paying out of your pocket for tuition and you're just getting reimbursed for 529, you probably want to mark for the category, you're going to want to mark that as 529 income, like so. All right, you always want to change these icons. Never leave those the way they are. If the question mark, otherwise they cause alarm bells. The other one I was actually going to go for is HSA. If you are spending your saving or for your medical expenses, and it's coming from an HSA account that you've been investing for years, then you're also going to want to create a category for HSA. Now, there's a caveat to that. If your HSA is connected to Monarch and it is feeding transactions and you like that, then you might actually be good. You might actually not need to mark those as transfers, because instead you're usually using the HSA directly in order to swipe for those things. And so you really just have to, again, running reports and seeing how is this showing up. If you don't like the way it's showing up, then change the category. But for most folks, the HSA transactions usually aren't showing up in the cash flow. And so what we have to do is when the money hits the accounts, when you reimburse yourself from the HSA to reimburse yourself for medical expenses that have come up, you'll mark that as income. So let's say you use $200 of your HSA funds, it hits your checking account, and then you go and spend it. Now, a lot of folks do spend directly from the HSA, so none of these transactions might not even show up for you. Maybe you don't have to deal with it at all. Maybe you can just exclude it completely. It just depends on how your HSA is being treated. But this is an example that you can experiment with. And if you don't like the way it's showing up, if you don't feel like it's accurate, then make sure you change it. And again, the way you make sure it's accurate is if you ran a report and you're looking at your HSA income and maybe your medical expenses in a report, if you feel like it is canceling out correctly, then you're probably doing it completely correct. So it is a personal preference, but that is another example of another income type that you might need in retirement. I hope that helps. Please let me know if there's any questions or if there's anything you really felt like I missed as far as budgeting or tips and tricks for retirement. Again, most of the things that you're going to do in Monarch are pretty much the same whether you're in retirement or you're still working toward retirement. But there's definitely some nuances there. So feel free to let me know in the comments what you feel like I missed, what you would like to see more on, and I'd love to do that for you. So thank you so much for liking, subscribing, and I'll see you again soon.